David Bacher from Corion Capital is joining me today for our monthly Corion Report review. Good to have you with us again, David.
Thanks, Lou. It's always nice being on your show.
So, Dave, tell me, October has gone a long way in terms of paring back some of the large losses that we've seen in 2022. Can you put the rebound into perspective for us and where that leaves the returns for the year to date?
Yes, sure, Lucy. I mean, if you remember the September Corion Report, we ended our video with the quote, "The darkest hour is just before the dawn." The local market, has appreciated by more than 17% since that interview. So it's been a significant rebound. Equity markets are now up more than 6% for the year. And given what investors have been through, many would have doubted a little while ago that equities will now actually be outperforming cash or money market instruments for the year. So it's been a volatile ride. Opportunities have been present. But you had to endure the volatility to reap some of the benefits.
It's been hair-raising indeed. Can you take us through some of the drivers behind the rebounds that we've seen in October?
Well, the main driver has to be, the US inflation print that came in lower than expected. And that positive news raised optimism that the Fed may start to ease up on its restrictive monetary policy sooner than expected. This, coupled with many companies falling so much over the last few months, were the ingredients for what was a significant rebound.
And our headline, as our viewers who follow this will recall, that September's interview was titled "Local is Lekker." How's that worked out for Corion, and are we still keeping that opinion in place?
Well, fortunately for our clients, it's worked out really well. If you think about why we came on the air and said local is Lekker, well, there were two main compelling reasons why we thought local equities will outperform offshore equities. Firstly, the local equity market was priced much cheaper than most of its offshore peers. In essence, we thought that relative valuation gaps could close. And the second reason was that the dollar had become significantly, in our opinion, overvalued. So what we were hoping for was some rand strength versus the dollar. So there was pretty much two ways to win. And last month, well, not just one of these things happened, but both. And the relative market valuation gap slightly narrowed and the dollar weakened. So this combination was massive for local investors. So in dollar terms, local equities outperformed US equities by more than 13% last month. That is massive. I'm not quite sure. I think you have to date back much more than a decade, if not two, to find out when that has happened before.
And I've seen some reports coming from analysts saying that they think that the dollar's run in terms of it being overvalued is coming to an end. And as you say, we've seen that benefit us significantly. And the other thing that's been interesting about this year is the historic figures that we're seeing in terms of treasury yields, interest rates, inflation going up. And sometimes we haven't seen the numbers in 30 years.
Sure. So when you're talking about currencies in South Africa versus the US dollar, the rand versus the dollar, we mustn't ignore the fact that South Africa does have its own risks as well. So, on the one hand, we're very cognizant of how much the US dollar has rallied, but it's rallied against everything. So, we're not thinking that just, we're out of the woods in the South African context. So, you still got to go back to diversification principles. We do believe you need to have some money offshore. But perhaps that offshore money should be more tilted, given what's happened in the factors that you mentioned, to the pound, the euro, but to the yen, not all to the US dollar.
Mm-hmm. And in terms of the metrics, what has stood out the most for the Corion Report in the last month?
So in the report, the Corion team put out a video showing how the market value of Tesla has changed relative to Berkshire Hathaway in a really short period of time. And I think listeners and people who watch the video will find this quite astounding. So at the start of 2019, the growth share darling Tesla was valued 10% of Berkshire Hathaway's market cap. By September this year, 3 years later, or less than 3 years later, Tesla's worth 150% of Berkshire Hathaway's market valuation. And then just 3 months later, Tesla's worth 80% of Berkshire Hathaway. So, you've had massive dispersions in valuations. And why we found this so interesting is just as a great illustration how the market often works. The fundamentals of the company can be rather similar over months or if not a couple of years. But how people perceive value can vary substantially. And these are the dynamics that create opportunities. And if you stick your neck out on what you believe are sound long-term investment principles, you often will be rewarded over the long term.
And it's certainly in terms of the fundamentals of sticking to those valuations and not getting carried away with sentiment. We've seen that in tech stocks. And nobody really seems to know what to expect. Are they going to rebound, capitulate? And the knock in terms of investors also seeing huge layoffs in American markets is another happening that's been unprecedented.
Correct. Back to rewinding the clock and thinking that you'll see these headlines date, if you look back 2 years ago, big tech is actually getting smaller. You've seen layoffs across the board. And things go through cycles. Nothing is as good as it appears and nothing is as bad as it appears. Investment cycles tend to overshoot on the upside and the downside. And we're certainly seeing that play out in the tech market now.
Mm-hmm. And do you think we're seeing an end or at least a slowdown to the volatility, or do we expect that to carry on into 2023?
So I think this year has been a standout year in terms of volatility. We keep coming on this show and saying, no, I think you should either lighten or add to your risk. And that's varying from month to month. That's not how it generally works. I mean, we are an agile investment firm at Corion, but certainly we don't change our views as quickly as we've changed our views about adding and taking positions on and off as quickly as we have this year. So I think the volatility will subside. It's been a bit abnormal. But I still think that there are significant headwinds. Interest rates are going higher, maybe at a slower pace. Inflation's still very high. There's extended debt out there. So we're not through, we're not through the worst. But I do think that the volatility will not be as sustainedly high as it's been through 2022.
Let's hope so, and let's also hope that there is a dovish Fed and that we don't see the recession that we're expecting, especially in terms of the old cliche for the US, when they get a cold, everybody else catches the flu. Following on from that volatility, we've seen insane volatility in crypto markets, and it certainly can be described as carnage. About a year ago, Corion put out a video warning investors about investing in crypto. Why did you send the warning out, and are they still valid?
Well, what happened this year in crypto, even before the FTX debacle, is another great lesson. What happens when hype meets reality. At Corion, we're not scared of sticking our necks out. Sometimes we know we will be wrong, but hopefully more times than most we will be right. And that's investing. No matter how much you think you're right, Mr. Market will often humble you. That's what makes it so interesting. But fortunately, with regards to Bitcoin and cryptocurrency, and fortunately for our clients, although we were quite unpopular at the time for posting that, at least it hopefully helps some investors to think twice before following the crypto craze. And in that video, we shared what our main concerns were. We actually listed 10 of them, but probably the main few were just that it was still unregulated and that there was a speculative frenzy that we'd never seen before. And since then, the cryptocurrencies have lost about 70% plus of its value. So it's been massive. So where to from here, to answer your question? Well, We still don't see the investment case in some of these assets or currencies. We're not experts on the field, so I must state that very clearly. But I guess going forward, there will be positive outcomes from the crypto crash. There will be better regulation. I think a lot of the speculators have been flushed out, so potentially you're going to have a better reflection of true value. So investing, you always got to look forward. So I wouldn't say we so as anti the asset class as we were a year ago. But we're not experts on cryptocurrency, but we like to think we can see a speculative frenzy. When it to us seemed pretty obvious.
There's certainly more caution and predictions, including from the likes of Stafford Marcy, that the route that we're seeing at the moment will clean up and Bitcoin will remain resilient. And there's certainly more caution in the markets. And hopefully, as you say, your investors heeded the call, and there's some room to play with crypto. David, to close off with, we're approaching the end of the year. It has been unprecedented, as we've said. What are the main investing insights and lessons for 2022? Are there salient points that we can share with our audience as they look forward to 2023 with, I suppose, reticence on how to approach markets and returns?
It's been a fascinating year, as I said earlier. It's been a great year in terms of knowing how markets behave. And if I had to probably sum up the biggest lesson that I think we can all learn from is what Warren Buffett famously said: be fearful when others are greedy, and be greedy where others are fearful. And if you just followed that simple advice, you would have done really, really well, because there was opportunities out there to be on the sidelines and be heavily invested. And that takes discipline, that takes going against the grain. But you follow those long-term investment principles, as I said earlier, you often reap the rewards.
And I think one last point that you've just made me think of is we saw a bit of a rally in South African equities affected by China. Are there any thoughts on how the environment in China with COVID lockdowns as well as protests may affect and impact South African equities, given the overweight view that we currently have on them?
I think the China situation is actually quite bullish for South Africa. They've obviously had significant lockdowns. If that had to change, commodity prices may go up, which we'll benefit from. China is one of the few economies that, from a fiscal and monetary perspective, is still stimulating the economy or has potential to do that. So, China market has fallen significantly, but once again, you've got to look forward. Valuations are reasonably compelling, and they've got enough tailwinds to really go against what in other economies, developed markets, that we're facing a lot of headwinds. So I think relative to all emerging markets relative to certainly in the US, we think is well placed.
Mm-hmm. It seems like there's potential for heartening news and less stress going into the new year. David, thank you as ever. It's been a pleasure to have you with us. We'll catch up with you in the new year, and we're looking forward to it. We've had David Bacher with us from Corion Capital on the Corion Report, and I'm Lucy Ferreira for BizNews.com.